welcome to Mortgage Solutions Television. Now, today I have with me Charles Morley, Head of Distribution for Kensington Mortgages. Big welcome,
Hello.
Charles. Now, today we're here to talk about your Simply Specialist range. Now, as far as I can see, this is a brave move. As a lender, you've decided to put your head above the parapet a little bit, make a move into actually flagging this mortgage range and marketing it as a distinct range, where perhaps many people haven't been willing to do that, or many lenders haven't been willing to do that for a while. So perhaps smaller lenders and building societies have been offering these sorts of products, but they haven't been flagging it. So Charles, why now?
Well, since we returned back to the market in November 2009, we've made a number of changes to our range, and this relaunch is really a culmination in those ranges, in the range itself. And what we're looking to do is make Kensington incredibly simple and easy for the intermediary to use. So what we've done is we've taken the most popular areas of the range and actually divided them into categories. So when an intermediary comes to Kensington, they can easily identify the area of the range to utilise and the area of the range that most suits their customers. Classic example of that would be the self-employed market. We've seen in the last 4 or 5 years a massive increase in the self-employed sector. A lot of very good professional people becoming self-employed for a whole host of reasons. The economy's been a reason, obviously people being made redundant and therefore sort of choosing new paths for their career. And a lot of these people potentially have only been self-employed for 3 years. They may have been self-employed for less than 3 years. So for a traditional lending institution, they may not fit a credit score. Or if they do fit, potentially they've done 3 years worth of accounts and the lender will average their last 3 years accounts. And if they've got an improving business, that can be fairly detrimental to the customer. So we'll look at the self-employed market slightly differently. We'll potentially look at somebody with 1 year's accounts. If someone's done the full 3 years, we can potentially look at the most recent year. So actually help the self-employed market and help them attain mortgages. So this move is very much a marker in the sand for us to really show our commitment to specialist lending, but at the same time show our commitment to the intermediary to help them have a very good lending experience when they come to utilise Kensington.
Okay, thanks, Charles. And your complex income criteria, let's getting into a bit more of the detail now.
Yeah.
Up to, you're willing to take 100% of regular overtime, bonus considered, up to 100% of second job income considered as well, and pension and investment income allowable. What does considered mean? So when a broker brings a case to you, when you say you'll consider it, what's going on?
Our lending policy basically states that we can take 100% of this income. However, each individual circumstances are slightly different. So perhaps an advantage we have is we manually underwrite all cases, so we don't have an automated credit score. So when someone applies to us for a mortgage, we can look at all this income, we can look at their circumstances and potentially can take all of it. I mean, a classic example would be second jobs. We've seen a massive rise in the second job market over the last couple of years. Not saying it's becoming the norm, but it is become more and more prevalent with people. So therefore, as a specialist lender, we need to look at this income, we need to take it into consideration because it is becoming part and parcel of people's earning capacity. So we'll look at their circumstances and the percentage we take will really be dependent on, once we've had a full look at the case, their actual circumstances.
Okay, can you give me an example of perhaps a case that you wouldn't take? Sort of where do you draw the line? Is there an instance or something that you know would give you trouble? Yeah,
I think if we're looking at things like overtime, bonus, commission, etc., we need to see some kind of consistency there. I mean, what we wouldn't want to do is take somebody on board who over the last 3 years has a very large bonus in one of those years, because it would be a classic example of irresponsible lending. However, if there's a trend and someone is earning consistent bonuses, then therefore we would look to take the majority of that into consideration. So it's very much looking for how somebody's developed their income and how consistent it's been over a period of time.
Okay, and another interesting area looking at your product range was your willingness to lend to first-time buyers with limited credit histories. Can we break that down a little bit? Charles, give me an example.
Sure, yeah. I mean, the first-time buyer market has been something we've always been interested in and something we've always wanted to help. And going back to something I mentioned earlier about not having an automated credit score system but having an experienced underwriting team, we can potentially look at the first-time buyer market that doesn't necessarily have a lengthy credit history. A number of reasons behind this will be potentially living at home with parents, building up a deposit, could be utilising debit cards and paying by cash instead of building up credit. So you can effectively have a first-time buyer with very little credit history, but when you actually get the case in, you get an underwriter looking at it, they can take into consideration outgoings, bank statements, and therefore help these individuals. So we could lend up to $500,000 to a first-time buyer and have other incentives like free valuations, etc. So it's very much helping them getting on the ladder and taking a look at their whole circumstances, not putting it through a scoring system.
Okay, interesting. And what kind of fees, taking the specialist residential side, for example, what kind of fees do you pay for these specialist lending deals? And what are you charging the consumers? So if I could ask the fee for the broker first.
We have a consistent fee right the way across the board. The brokers earn 0.4%, whether it's a buy-to-let or a residential product. There is no differential at all. From a charging point of view, we charge rates start from 3.44% on the residential range, and that covers really the whole spectrum of products that we cover. So we go from complex income, self-employed, all the way through to the buy-to-let market, which includes first-time landlords and the more experienced landlord.
Okay, and what sort of fees are you charging consumers as well?
If you're looking,
attached to these products?
absolutely. If you're looking at the residential range, you're talking a completion fee of just under £1,000. £999 is the completion fee.
So turning to the buy-to-let side of things, I see there's no maximum portfolio limit. And so is this a step change for the buy-to-let market? Are other lenders doing this?
The buy-to-let market has changed quite a lot over the last couple of years. I think primarily because a lot of lenders, there's been a lot of consolidation within the lending market. So you now have a group of lenders that fit into a financial camp, so to speak. They're owned by one parent company. So to a certain extent, we're finding that they're not only limiting the amount of buy-to-lets they will take across all their lending institutions, but they'll also limit the amount that an experienced landlord can actually hold in their wider portfolio before they'd lend to them. So whereas we look at the buy-to-let slightly differently, we'll allow them to have up to 6 buy-to-lets with us, but to a certain extent we will ignore the portfolio that sits in the background, provided it is being obviously conducted satisfactorily and they've kept up to date with mortgage payments if it is a mortgage portfolio. And what it enables us to do is to assist both the first-time landlord and the experienced landlord. And the buy-to-let market is still critical to the UK mortgage market. It was 11.5% last year, up from 9.8% in 2011. So it's a market that's increasing, and we expect it to increase this year as the demand for good rental property continues. So it's a market that we want to be actively involved in, a market that we want to support both broker and landlord, and therefore we will lend up to £1 million on these particular products.
Okay, well, thanks very much for that, Charles. Just a snapshot, really, of what's happening at the moment at Kensington Mortgages, but, you know, I'm sure it would all help in terms of the intermediary market. So thanks very much for joining us today.
Thank you.
Thanks, and thanks very much for watching as well.